Like I said, this is a prolongation video of what I did yesterday. For me, it's yesterday. For you, it's just as yesterday. So I feel like this is a magnum opus for someone who doesn't know anything about finance. I know very well a lot of people are astounded by looking at my new attire. But I know if you want me to do some frisky stuffs, I'll do it I'll do some nasty balderdash, but not now. All right, no, not now. But yeah, it's not all about slogging myself into this sector. So, but not today. There are a lot of chaps who keeps on faffing around, and maybe they also psych you, and you can watch them and get some dose of hedonism. So this is predominantly based on my upcoming future plans, future things which is happening into this sector. What I feel is, so this is but honestly speaking, you'll never find someone dexterous like me. I know I'm a bit tardy and sluggish into this territory, but you gotta fathom me and have some credence in me. All right, I'm just like how am I selling myself? I'm supercalifragilisticexpialidocious. You feel me? Like enough of the hogwash. I guess I should. I have very less time, so now I'll have to cram it up. So excuse me for that. So I have very less time, and now I have to cram it up. And let's just cut the Guardian's knot. What's it? Please excuse me if anyone from the financial domain is watching this video. This is a very rudimentary model, very basic. This is not something paramount. It's a, you can call it an itsy bitsy model. You can loathe it since it's very naive and beginner sort of model. You can call it as a baby model. So yeah, please excuse me. This has nothing to do with the advanced part of it. All right. So financial model. What is a financial model? Or basically, what is finance? So anything related to future predictions is related to finance. So, and anything related to analyzing, organizing data about the past is called as accounting. So accounting is mostly focused on accuracy in the past, and finance is not necessarily for getting it perfect, but making good predictions. And of course, they'll never be correct. Let me tell you that it's all about trying to build predictions that make sense. You feel me? So the most common financial model is income statement and profit and loss statement, which is trouble free, is extremely facile, uncomplicated. Basically, it is very straightforward, and I will look and just do it with the mouse. So I apologize, but you can see the company C is growing. So this is our forecasted data. So with the help of this data, we can analyze, and we can actually predict we can actually have a look at the company and then decide whether we have to invest in this company or not. That's basically what an FM. Why do we need FM? All right. So let's say if we take a hypothetical situation. Let's take a hypothetical situation whether when we want to roll out an item at we want to roll out a product at a certain price. When we built a financial model, we might see that the price point is too low, so we might lose our money. So basically, it allows us to analyze new opportunities about the future, so that we can have more confidence about the product. Basically, it gives an information about the things that haven't happened yet. So that's why finance is very powerful. And why financial modeling? Again, one of the biggest reason is to raise investment capital. All right. If I need an investor to invest in my business, so I have to showcase my financial models. So to be able to predict the future, to get investors invest into my business. So that's about this business, and that's what I understood while being a rookie into the financial sector. Tyro, you can also call me Tyro in this sector. So yeah, thanks, and that's pretty. Let's begin. So this is a presumption model. This is a presumption model. Let's take a hypothetical situation that this is a company called as Mazda, and Mazda is a company which belongs to the automotive sector, and it's a Japanese multinational automakers. So I've taken the 2 years presumed data. So the 2 years of presumed data was taken into Excel sheet first, and the first item we need to forecast is revenue. Before that, we in this business we have some units because we have to build a product, right? So we have some units there, and these are the price, and these are the hard codes. That's why it is in the blue section. Right. Calculate revenue, we just have to do a simple multiplication, and that's how we calculate the revenue form. And so next comes the cost. What it cost us to make the product. Right? Cost of goods sold is just cost of unit 41, which is 41 into 220. So this into this, which comes to cost of goods sold, and then we just have to drag to the right, and we have the data. This is the presumed data which we have got us, and how do we get operating expenses is basically we just do a simple addition, and then we get this operating expenses, and that's how it is. And then the next up we have to do is to create a income and profit and loss sheet. So the revenue and cost of goods sold are already given, so we just have to just drag down this to up to here, and then to find out the gross profit, it is obviously revenue minus cost of goods sold income, excuse me. So operating income, basically we have just dragged down all those accounts over here, which we name it as expenses, and then to find out operating income, we did gross profit minus total expenses, which is gross profit minus total expenses, which comes to this, and then we just have to drag it to the right side. Then taxes are operating income into tax rate, which is 35%, which comes up to this. And net income, how do we calculate net income? Is operating income minus taxes, which is this minus this, and we get this. So this is basically the assumption model, whatever you can call it as. For the forecasted data, we have our units, our values grows 7% per year. So in the unit section we have seen the growth of 7%. So, and obviously then we just have to drag it to the right side. So the price is increasing at the rate of 3% per year. And for the revenue, we already have the cost/units. You're gonna have some element of inflation, so we'll keep it low. I've kept it low to 2% here, as you can see, formula bar. So it is a 2% cost of goods sold. So it is, as I told you, like we already got the formula, and the wages, salaries, and other benefits, which has grown up to, we have increased it up to 4%, as you can see in the formula bar. And lease is 100 rupee per year. It's actually contractual, so but I've kept it like 100 per year. And for marketing it is somewhat around 3.5%. Insurance, it's a growth of 3%, and others I've kept it flat. So one thing that is maybe worth checking is to look at our net income as a percent, as I've already calculated the net income, and we have got like 20% margin business growing all the way to 23.54, which is close to 24% margin business. So we So we are definitely getting the leverage, all right? So this is, I know this is extremely rudimentary model, extremely Tyro, and this is a business model which I feel like everybody can actually prepare. This is a simple financial model to be able to take business information and do a quick look at what your revenue, cost, expenses, and ultimately your income looks like. It actually gives you a forecast of 3 years, as I've already calculated. But I'm practicing these models. I'm just practicing these modeling abilities already. This isn't getting into anything advanced. So this is a very Tyro, very rookie. I'm a rookie, as you know, in the financial sector. So this is what I've created. That's pretty much, I feel like this is just a beginner's model, Tyro model, and I guess yeah, that's pretty much. I have a bipolar attitude, sort of. Like, I'm different on YouTube, I'll be different on Instagram, maybe I'll be different on any other social media. So yeah, that's pretty much it, and I have kept it so long, so I just have to now. I'll just finish the video. So I'll see you in the next one.
Recording stopped.